Hey, what's up YouTube? Fritz Investing back with another video, and today I wanted to share my $16,000 Robinhood portfolio update with you. I know it's been a while since I've done a portfolio update. I've been working on different kinds of content, and I've been also working very hard to contribute as much as I can to my stock portfolio. If you haven't done so yet, please don't forget to like, comment, and subscribe to the channel. This channel talks about investing in the stock market, decreasing your debt, and growing your wealth. So if those kind of things interest you, then this is the place for you. Today in the video, we'll talk about how my portfolio has been performing, my 5 worst performing stocks thus far, my 5 best performing stocks. We'll also talk about all the dividends that I'll be receiving for the month of June. And finally, I'll leave with the finance quote. So with all that said, let's get right into the video. For portfolio progression, we can see that as of Friday, my portfolio was up $417 and up 59 cents after hours. For the past week, the portfolio was down $712. Over the past month, the portfolio has appreciated $1,863. Over the past 3 months, the portfolio is up $1,161. In the past year, I'm down $1,251. Finally, all time, the portfolio is down $1,126. On April 3rd, the portfolio had reached its lowest point at $12,398. On Valentine's Day, my portfolio was worth its highest point, which would have been $18,515, and I would have been a positive 7% overall. The pandemic has been the single greatest nemesis to my portfolio, and I believe that once we find a way to stop spreading the virus and also possibly a vaccine, that my portfolio will rebound really nicely. Next, we'll talk about the 5 worst performing stocks of the portfolio. Most of these stocks have been in the real estate segment, which has been severely impacted by the pandemic. According to an article written by Tamara Holmes on Yahoo Finance, we see that the pandemic has induced stay-at-home orders, leading to the closing of businesses and widespread layoffs. According to a Satisfact survey, 38% of respondents reported losing half their income, while 16% reported losing all their income. Age was also a big factor. If you were aged 18 to 24, 24% of people reported losing all their income. Rent was also a big factor. If people were paying less than $1,000 per month, 19% reported losing all their income. However, if you were paying more than $1,750 per month, over 50% reported no change at all in their income. People panic selling their stocks and people not being able to make their rent and mortgage payments. This has led to REITs being hit very hard by the pandemic. The first stock is Realty Income, which stock's price is $60.79. Overall, I'm down $104, and my portfolio value is worth $621. This comprises of 3% of my portfolio. I'm going to continue to dollar cost average my price down, and I'm also going to continue to invest in this company because it's raised its dividend for the 107th time since 1994. To investment, ticker symbol NRZ. The stock's price is $7.56. I own $130 worth of equity with an average price of $14.71. I'm going to hold on to the shares that I have for now. Next is AT&T. Right now, the stock's price is $30.55. My average purchase price was $36.94. I own just under 41 shares worth around $1,250. My plan is to just hold on to the shares of the stock that I have for right now. The stock's price did dip back in March when it was announced that it was going to cancel its $4 billion stock buyback program. Stock buybacks are important because it allows the company to reinvest back in itself and further growth. However, with the company releasing a new HBO app in July and expanding its 5G coverage to over 90 new markets and more 5G phones coming in the future, I do see the stock's price recovering. Next is Apple Hospitality REIT. Right now, the stock's price is $11.41. I own 80 shares of the stock. My average purchase price was $15.66, and overall, I'm down $341. Apple Hospitality REIT owns almost 30,000 rooms and 233 hotels in over 87 markets. Average occupancy in February was 75%, but fell to 20% in March through the end of April. I see the stock's price going back up again once people feel more comfortable with traveling and staying in hotel rooms. The stock that had the biggest loss for me is New York Mortgage Trust. This is really painful, so get ready for this. The stock's price right now is $2.82. My market value is $1,635. My average purchase price was $6.03. Today, I made $17, but overall, I'm down over $1,850. So earlier in the video, I talked about companies being down as far as REITs being affected by people not being able to make their mortgage and rent payments. This company was severely affected by that because that's where most of their real estate come from. Also, this company is based in New York City, which was heavily hit hard by the pandemic. So people were unable to go back to work at this job. So this stock suffered huge losses in the past couple months. We can see that the revenue over earnings has been pretty good for this company, rising every year since 2016. Back in 2016, the revenue over earnings was $105 million over $67 million in earnings, and last year it was $225 million over $173 million in earnings. As far as free cash flow, we can see that for New York Mortgage Trust, so far this year there's $47 million worth of cash flow. In 2019, there was $34 million. The year before that, there was $23 million. In 2017, there was $29 million. And finally, the year before, in 2016, there was $53 million worth of free cash flow for New York Mortgage Trust. I encourage you to continue to do your research. I don't want you to lose your hard-earned money. Study those fundamentals of those stocks. Even though the fundamentals and financials can be solid for some stocks, catastrophic events or pandemics can happen that can greatly affect the price. But you have to be able to adapt. And when you're doing that research on those other companies, it can help you to pivot, to kind of mitigate and lower your risk of losing a lot of money in desperate times like we're having right now. So those were my 5 worst performing stocks. Now we'll talk about some more positive news, my 5 best performing stocks. This is Alphabet, aka Google. Right now the stock's price is $1,452. You can see its trends over time. It's been trending up pretty nicely over the last months and years. I own $746.16 worth of equity. I own just over 51% of one share. Currently, I'm up $90 all time, and I plan on investing in this stock as much as I can. I've been adding between $5 and $10 each day to try to increase my position as quickly as possible. YouTube and Google remain very popular, with Google receiving over 40,000 searches each second and YouTube receiving over 30 million daily visitors. Next is a company I'm sure you're very familiar with, Amazon Incorporated. Right now, the stock's price is $2,639. I have a market value of $904, and my average purchase price was $2,122. Right now, this stock comprises around 5% of my portfolio, and since purchase, I'm up $177. Once again, I'm going to continue to invest in the stock as much as I can. I've been investing between $5 and $15 each day to try to grow my valuation and my shares in this stock. The company has been steamrolling competition and growing quickly, up over $700 in the past year, and the company is now the 3rd most valuable company by market cap, worth over $1.3 trillion. The next stock that has performed really well for me is Microsoft. Right now, the stock's price is $193. You can see its trends over time. It's been steadily progressing positively for at least the last 5 years, and it's one of the best tech companies to own, and it has the financials to back itself. Right now, I own $1,256 worth of this stock. I almost own 7 shares with an average purchase price of around $165. It comprises around 7% of my portfolio, and overall, I'm up $186. I'm going to continue to invest in this stock, and like the other tech stocks, I've been investing between $5 and $10 per day. This is the 2nd most valuable company in the world, worth almost $1.5 trillion. The next stock on my list, surprisingly, is not a tech stock. It's actually a REIT, or real estate investment trust. This is Lexington Realty Trust. Currently, the stock's price is $10.99. Right now, I own $1,835 worth of equity. I own 167 shares, and it comprises around 11% of my portfolio. Since purchase, I'm up $310. I'm going to slowly add on to my position in this company because it's performed so well for me. And my average purchase price was around $9.13. So that means it's progressed steadily since then. So I'm just going to continue to invest in it. According to a report by Globe Newswire published on June 2nd, Lexington Realty Trust was able to collect almost 99% of its May rents. All of these rents were collected in the industrial space. Before we get to the company that has provided me with the best overall return, I ask that you please subscribe to the channel, leave a comment, and smash that like button. It will be greatly appreciated. So the stock that has performed the best for me has been none other than Apple. Right now, the stock's price is $350.30, and if you look at its graphs over time, it's appreciated really nicely. Over the past 3 months, the stock is up over $100. Looking at my market value, you can see that I own just over $3,300 worth of this stock. It comprises 20% of my portfolio, and my overall return has been over $600. I think if it continues progressing, I'll have enough market appreciation to almost buy a completely brand new iPhone, which is crazy. Apple's market cap is over $1.5 trillion, and it has dominated the US smartphone market. As far as US smartphone market share by quarter, we can see that in quarter 1 of 2019, Apple had a market share of 39%, and this rose to 46% in Q1 of 2020. The company is crushing competition. Next, we'll talk about all the dividends that I'll be receiving for the month of June. So starting on June 1st, we see that Walmart paid me 35 cents, Essential Utilities 26 cents, Visa 6 cents, Parker Hannifin 25 cents, Johnson & Johnson $1.70, AGNC 12 cents, Target $3.05, IBM 21 cents, Microsoft $2.95, 3M 72 cents, Realty Income $2.26, Stag Industrial $2.15, McDonald's 38 cents, Main Street Capital $1.19, Waste Management 19 cents, Bank of America 18 cents, Nvidia 2 cents, CCI 7 cents, and finally Pepsi is going to pay me 32 cents at the end of June. Last June, I was paid $7.58 worth of dividends. This June, I was paid $16.39 worth of dividends, which is a 116% increase year over year. I'm very proud of that. Today's finance quote comes from Teddy Roosevelt. He says that the only man who never makes mistakes is the man who never does anything. I've made some mistakes in my investing career, but I've learned from those mistakes and it's made me a much better investor. I can definitely say that today I'm a much better investor than I was when I started in 2017. So it's okay to make those mistakes as long as you learn from them. So why don't you go out there, learn some things, make some mistakes, get better, and get that passive income. I hope you enjoyed the video today, and I'll catch you next time.